So has anybody ever thought about applying that 20/80 rule to our investments? Well, the 20/80 rule is the idea that 20% of anything is usually more productive than the whole. So, for instance, if you're in a sales environment, they always say that 20% of the salespeople do 80% of the business. And the classic investment concept, ideally, would be utilizing that idea that we would take 20% of our total assets and produce 80% of the return on investment, thus really risking only 20% of our total assets. So what I'm saying is we want, ideally we would like to create a situation that we're getting the majority of our ROI simply by utilizing 20% of our total assets. And then with the other 80%, we can keep that 80% in a safe environment and allow our portfolio base to grow and continue only really risking, if you will, 20% of that total asset, keeping the majority of it safe. So let's look at that in a little more detail from an application point of view. Because of the situation we're in now globally with communications and whatnot, everybody probably realizes we have real quick access to managing facilities through the internet. All of the banks and everybody does provide us with online internet services to have access to our cash directly, and we can self-manage and directly control where we put our investments in real time. So high-tech and high-touch management allows us to really utilize our own intelligence and put our own intelligence to our money, allowing us to create extraordinary returns on that. So I guess what I'm saying, bottom line in a nutshell, is let's start utilizing the stock investment accounts that are available through our traditional facilities like the banks and whatnot. We can now open trading accounts and use the internet and the high-tech, high-touch environment to manage our own money instead of having somebody else do that for us. So most of us will say, oh, well, I can't do that, and I really don't know anything about stocks or that type of situation. Now, what I'm going to challenge everybody on is that I believe, because I have demonstrated the ability to train people, and these people literally, the majority of my clients have had literally zero experience in the stock trading environment. I believe that literally anybody is capable of doing this, because when we focus on the important things in the trading environment and utilize the high-tech, high-touch environment to implement these simple things, we do discover that we are capable of managing our own money and making returns that most people would say that are, we would say that they're extraordinary. So that's the idea, is to utilize an old idea of taking a small percentage of our assets and managing those in an extraordinary manner, thus producing the majority of our income from that small percentage, and thus increasing our asset base, which would be investments that are traditionally perceived to be safe. For instance, real estate or guaranteed investment certificates, that type of thing. So let's just leave this slide at that, and let's go on to the next slide. Okay, here's a graphic representation of what I'm talking about. The objective is to classify our assets and ideally increase the bottom of our asset base by being assertively active in the top part of the pyramid that is a classic high-risk arena. So what I'm suggesting is that we self-manage the top part of the pyramid by utilizing a suggestion that I have that we utilize stock options as the tool to gain a high return in short periods of time. Now, with utilizing the high-tech, high-touch environment through our banker or our brokerage outfit, we can self-manage a smaller amount of money utilizing the classic idea. So basically what I'm saying is that what we want to do is increase the guaranteed and solid assets on the bottom, where you classically get your 5% annually. We want to increase that asset base by simply using a smaller portion of our assets that normally would be in an extreme risk environment. So what I'm saying is, by self-managing it and utilizing hedge fund techniques with stock options, we change that high risk environment to a self-managed environment that really isn't high risk anymore, because we have direct control over it. So the basic idea is simply to use that small portion of the total asset, utilize a tool like stock options to gain high ROI and increase the bottom asset base. So classically, the bottom part would be things like real estate, guaranteed investment certificates, etc. As we move up in the pyramid, we're looking at progressively more risky environments. For instance, blue chip stocks would be classified as low risk. A more assertive position would be maybe investing in your own business. And then the classic extreme risk arenas are the penny stock environments and the junior capital pool type investments. So what I'm saying is, maybe if we utilize a scenario where we can take direct control over that top part, then it's not really high risk anymore, and we've taken a position where we can directly control that ROI. So that's the classic investment concept. On to the next slide.